Pay your kids for a huge tax deduction. Hiring your kid is a great way to reduce your taxable income. There are huge tax savings by doing so. If your child is going to be doing actual work for your business and you follow the guidelines and implement them effectively, you'll be able to enjoy some substantial tax reductions. All the while, teaching your child to be responsible and learn a little about money management. Whether you put this money in a savings account, custodial retirement plan, or college savings plan, it will give them a head start in life. However, there are a few factors to consider when you do this, but do not fret, it will all be worth it in the end. Hello and welcome back to another video on our channel, Finance Sense, covering all the latest trends in the financial markets and the economy. In this video, we'll focus on the topic of hiring your child to reduce your taxes while helping them save money for their future. But before we begin, make sure to like this video, subscribe, and click on the notification bell to stay updated with our videos. Without further ado, let's head on to the video. When it comes to hiring your child, the first thing you should check into is your taxes. Not just with the IRS for federal taxes, but also with your state taxes. And in terms of child labor laws, you must first check the federal labor laws at the Department of Labor or the U.S. Department of Labor, then the state labor laws. Going through the labor and tax sides of things will assist you in hiring your child to save on taxes and help them with their personal finances. Moreover, the IRS now has a page devoted to hiring your children, especially parents hiring their own children and family members. Additionally, the U.S. Small Business Administration's website has a page explaining 5 reasons for hiring your child. According to the SBA website, hiring your child is acceptable to the IRS, the SBA, and all other federal authorities and has its associated advantages. The U.S. Department of Labor provides information on whether or not you can employ your child. There is now a special exemption for parents who hire their children. According to the Fair Labor Standards Act, children under the age of 16 who are employed in a non-agricultural job at a company owned exclusively by their parents or by a person acting as their guardian may work at any hour of the day for any number of hours. However, parents are not allowed to hire their children in manufacturing, mining, or any other dangerous activities listed by the Secretary of Labor. If you hire your own child and are the business's sole owner, you are included in this exemption. In this case, the business entity can only be an LLC with one member, or if it's a partnership, both owners must be the child's parents. You can't be in a partnership with someone other than the parent because that's not how it works, and it does not fall under the exemption. Therefore, whether there is a way to get around it or not, both parents would have to be partners in a partnership. The exemption in reducing taxes would not apply if you were directly employed by an S corporation or a C corporation. According to youthrules.gov, children under the age of 14 can gain useful work experience when they are employed, but the jobs they can undertake are limited. Even if you determine that your kid is employable under state or federal labor laws, you should still review your state's labor laws. You'll have to choose whatever is stricter or more stringent at this point. Consequently, you must abide by your state's labor laws if they are stricter. However, you must adhere to federal labor laws if they are more stringent. Now, let's get into the tax side. According to the IRS, the advantages from a tax perspective include that if a person is under the age of 18, they are exempt from paying FICA tax. FICA tax is the 7.65% tax paid by the employee, which is matched at the same rate by the employer, totaling to 15.3%. This is not required if you employ your child who is under 18 years old. Additionally, if they are under 21, they are exempt from FUTA or federal unemployment taxes. And here's where it gets really interesting. Your child is eligible to file their own tax return if they are working. But if they fall for the standard deduction, they are no longer required to file. The standard deduction in 2022 is $12,950 for a single person, which would be your child. As a result, if they earn up to $12,400, they are exempt from paying federal income taxes. And since you are employing your child, you can deduct their income from your business expenses. So consider the scenario when your tax rate is 22%, wherein the standard deduction is set to $12,400. So even if you pay your child $10,000 over the course of the year, their taxes will be zero. On the other hand, if you paid him less because you were in the 22% tax rate, you would have to pay $2,200 in taxes on your own tax return. Thus, this is the only way to lower your taxes while still helping your child save for the future. After reducing your FICA, FUTA, and federal withholdings, the next thing you should do is evaluate the additional documents. Make sure you're withholding the correct amount of taxes, create a job description, and have your child sign an offer letter. Even though they might not be subject to federal withholdings in this situation, you should still complete the W-4 form. Additionally, you can check what counts as a withholding exemption if you visit the W-4 for 2020 and go down to the instructions. You are eligible for the exemption if you have no federal income tax liability in 2019 and don't expect to have one in 2020. In order to claim the exemption from withholdings, you must certify that you fulfill both requirements by putting the word exempt in the area below Step 4 on the Form W-4. Simply put exempt directly after that, have your child sign it, and then keep the document for your records. One final tax consideration is your state unemployment. You should check your state's laws to determine whether they have any requirements regarding withholding state unemployment taxes. Now, the pay is the next thing you ought to look at. Ensure that the job is reasonable for them to undertake and that the salary is fair. So it's essential to keep track of or document this, and a simple way to do it is just to do a Google search on the typical salary for the profession your child will pursue. According to parents.com, the hourly rate of child's model is $150. However, this might seem excessive, given that the median hourly income for a model in May 2019 was $13.63, according to the Bureau of Labor Statistics. However, it did increase, upping to 26.75 cents an hour. Like all your other tax documents, you should document where you're finding the information. Keep your receipts in case you are audited, just like you would for any other audit. This receipt proves that you paid your child a reasonable salary. The next thing we should address is where to put this money. What you can do with this money is put it into a Roth IRA for the child because it is now considered earned income. However, you cannot use it for expenses you are supposed to pay as a parent. In 2020, the Roth IRA limit was $6,000. So long as that is your earned income, or whichever is lower, you can contribute up to $6,000. The maximum contribution you can make to a Roth IRA is $6,000 or $4,000 if they only earn that much. For their own benefit, you can also invest this money in a 529 college savings plan. Therefore, in addition to saving money for their future education, you're also lowering your own taxes and keeping your child's taxes at zero. You need to make sure you have all the necessary paperwork and documentation and maintain accurate records. Hence, you can employ a strategy to lessen your own taxes while still preparing your child for their financial future. Hi, we hope you liked watching this video and learned something important. If you enjoyed it, please like, subscribe, and hit the notification bell to stay up to date on our videos. And make sure to leave your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Until next time,